Hi and welcome to the Market Alert for Thursday, the 21st of January 2020. So the debt question facing Janet Yellen, how much is too much? Well, this woman loves to print money, make no bones about that. And she's now Treasury Secretary, taking over from the Munchkin from Goldman Sachs. And I suppose really the answer to this is until they can't service the interest payments, but then of course they'll just drop interest rates anyway. And Janet Yellen has already said in the past that she'd quite happily vote for negative rates. So I would imagine that those are en route as well. But if you want the full details on this, then have a look at the Money GPS this morning. If nobody buys US debt, what happens? And I'll put the link in the email and also in the description below. Because this chap goes through the whole thing and explaining how and what is likely to happen on this basis. Very, very interesting. I'm not going to replicate it when he can do a far better job than I can do. And also I want to focus on the market more so than the debt. But for those of you that are interested, it's well worth a look here because it really is a very good question. I mean, how much is too much? Well, it's going to be an interesting 4 years because, as I've said before, you'll be able to see the printing presses smoking from across the water once they get started. I mean, he's already signed 17 executive orders. The next one will be, no doubt, to get another couple of trillion into the pockets and the markets to keep the illusion alive. And speaking of which, obviously the market liked this because we had a new low yesterday in the implied volatility down to 1657, the lowest since the pre-COVID correction that we had earlier last year. You can't call it a crash because the market has turned around and gone back to the all-time highs. So 1657 is the figure. We could actually move lower now as they start to print money, but I suspect we're going to get a bit of a sort of a hangover after the honeymoon sort of thing in the next couple of days. Also, there you can see we're down in the green, and it's just if we could get down to these levels, that would be fine by me. The lower this goes, the bigger the correction, as we saw before, we will get. Biden's also mandated 100 days of wearing a mask, as I said yesterday. I don't know what the scientific reason behind 100 days is. I know the political reason, the first 100 days in office. But interesting that he's already mandated this. So he's the COVID thing is going to start hitting the news in the US, which is going to put pressure on the markets, which gives them an excuse to lower interest rates and print more money. Because that's exactly what they've done for the last 13 years. When it says in the Money GPS video, if they'd have just, crashed everything in 2008, we wouldn't be dealing with this now. We simply would have gone past it all. There'll be no talk of resetting and all the rest of it. But as I've said many times before, it's not happening on my watch, is the mantra of all of these people. They don't want to be blamed for it. They have the perfect excuse now, of course, with the virus. And I'm sure they're going to use that to its full potential, that nobody gets the blame and they can all blame the virus. It was the virus that caused it. It wasn't the debt. We were in control of the debt. But unfortunately, we had to shut everything down, and it's the virus. That's how it's going to play out. Anyway, today's news is interesting. What have we got? Monetary policy statement. So that's Lagarde. That's out at 7:45. She's up early. And then we've got, it's all ECB today, isn't it? Apart from Fed Philly Index and unemployment claims, the normal ones. Another million there predicted for today. So it's just going to get worse from this point forward. Like I say, enjoy the honeymoon of Biden because once this money printing starts, it's really going to accelerate. It was bad enough last year with 6 trillion under Trump, and that's all gone. Incredible, isn't it? They keep saying stimulus, 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 and yet there is absolutely no change in the economic outcome whatsoever. Absolutely nothing. The only thing that changes or increases are the asset bubbles, bonds, house prices, and the stock market, which at some point will all end, of course. And when it does, it'll be a party of all parties. That's for certain. What else have we got tomorrow? Just having a quick look. Oh, it's all the flash stuff tomorrow, isn't it? Okay, let's have a look at the market's reaction to what went on. I suppose let's start off with the US and have a look here. Well, we went straight back yesterday, didn't we? Heading back to all-time highs. Let's just get a ballpark figure on what the market did yesterday. 366, just probably a 400-point range, to bring the market back to the all-time high there that we can see at 31,252. Will we get through this today? I don't know. I would imagine that we're going to stay in the honeymoon period, get my teeth in this morning for a bit, and see the implied volatility move lower. The lower that goes, the bigger the correction we will see. As you can see, this market is vertical, isn't it? You have to look at the monthly chart there to see exactly where we are. The insanity continues. There's absolutely a complete disconnect between reality and what's going on in this market, and we only have to just go back to 2008 to see this, and you see exactly where we are. This is not real. It is a complete illusion. This is what you get by printing money and giving it to the bankers, who then put it in through the primary banks all the way through and into the market. The money's cheap, and this is how it happens. And of course, tech stocks continue to be seriously overvalued, along with everything else as well. Meanwhile, in Europe, we didn't head back to the all-time highs yesterday, but we did have a move to the upside. Bit of weakness there at the 62% retracement at the moment for the German DAX. That retracement drawn in from this high to this low. And I could have gone from this high to this low as well, and that'd be around about 78%, 89. So there is some resistance in this area. In fact, I'll just draw that in for you so that you can see it. So if we go from here to here, from there down to there, yeah, you can see there we're just about 89% there, 78, 89. So you can also see, if I just remove a few of these and just click on this one, you'll see that this is a 62 and 78 at this point here. You've got the convergence of two fib retracements there. So just keep that in mind, and that is at, well, let's call it 14,000, just to make things easier. Well, 950 actually. Yeah, let's make it 950. Yeah, it's another 50 points higher, isn't it? So 950 would be the area of a resistance, which is actually already here, of course, in the 2-minute chart. That's exactly where we are. Just double check that. It's early. I'm not fully awake yet. 59, yeah, so that's exactly it. Yeah. So let's have a look overnight and see where the markets have traded. And we'll see here that, let's just squeeze this up a bit more so we can see where the DP is. So the market's coming back down to the 200. Found some support early on. Like I say, the euphoria is over, Biden's in. Now the reality kicks in. What is he going to do, and how much are they going to print? So we've broken the 200 there. We're also down from the high, but we are at that convergence of the two Fibonacci levels from the daily chart there. So again, keep an eye on this when the futures market opens. And also, in the event that the market moves lower today, just remember that the one BRN above the DP level is where those two fibs more or less converge. Okay, let's have a look at yesterday and see what happened. We saw the market move straight off the low in the futures market, moving up 74 points before the cash market opened, and we started off with a potential buy signal there that wasn't filled. And then the market put in a sell. Now what I've done here is drawn in, if I can just bring this back a bit, let me just see if I can do this. I drew in from this low to this high just to see how far the market would actually come back, and you'll see those fibs on there now. Now the first thing is, immediately we see the market being bought back and coming off the BRN there. So first clue is they don't want the market down. They're going to do whatever they can to move it up. And also Biden being inaugurated as well is always a positive. It doesn't matter who it is. It's always the chance for change, etc. And they tend to move the market higher. So trying to get a sell-off on an inauguration day is incredibly rare. There you can see the market being run up towards the stop. and then move lower, and then you see this trade being filled. Now, interestingly enough, the market trades down to the 89% there. Now, even down to the 200 would be a big ask, given what the day, what lay ahead for the day there. So again, you see the market coming back. It's still sideways, and then we get a bounce off the 200 MA back below the BRN, and when we get back down towards the entry price, for me it's not going, and I decided just to take the trade off the table. It's too sideways, nothing's happening. If it was going to sell off, it would have sold off a lot quicker than this, even though it had put 74 points on at the start of the session. The backdrop for yesterday was Biden's inauguration. So what I've done now is just mark up the fibs to the upside, just to see what strength the market's got. I've also covered the two highs where the market had some resistance, and once we've closed back above the 20 bar and the BRN, prices start to move to the upside and hit a brick wall at that 13,869 level. Prices then reverse, and I'm going to move through this quickly. You can see here, I was looking at the 1 minute chart just to show you where the buying came in here. You can see how they picked this up, and this is why this market came off the lows, and these are bars that I've spoken about for a long time as well, and this is what's happening inside. So we've got the 2 minute chart here, and you can see the market coming off those lows, and the reason being is because you've got all of this buying here in this bar, so it brings the market off the lows, and that was the trigger point for this market to go to the upside. They all bought at the BRN, and then as I fast forward through this, again, I'm not going to highlight everything. We've got the profit taking coming into the market there. So they ran the market up, and then you see the selling there, the highest volume bar, and then prices making their way back down to the BRN. You'll notice here we've got some buying pressure as well, more increase in volume than the previous bar at the close at the DP, not BRN, sorry. So then the market just traded sideways, became really quiet, as you would expect, again, just waiting for the ceremony. So I'm going to whiz through this and get to the afternoon session now. The afternoon, you couldn't make this up. I wanted to be here, but unfortunately 6 weeks ago I'd made an osteopathic appointment, and obviously these things are very difficult to get hold of, and I had to go to this. Normally they're 9 o'clock in the morning, but for some unknown reason completely forgot about the inauguration in January, so I missed all of the activity in the afternoon, which is why you're seeing nothing drawn on the charts as we get to the session, whereas you would normally. And that's the reason why I got back at just after 4:30 to see the markets had moved to the upside. So again, you can see very much like the morning session there, where prices are traded sideways, all red, and then the buying picks up in the market just after he's sworn in. And following the Dow, the DAX moves high. You can see selling pressure there at that BRN. That's plain to see. We had some potential weakness here as well, but that's a selling pressure up thrust as well, and they blasted through that. But the market only managed to get to the BRN, then back down to the 20 bar. And if I'm not mistaken, you'll see, if I can draw this straight, down to there, you can see the volume is greater in this bar as the reverse prices from the previous bar as well. You can see there the volume's greater, so again, a bit of support there, and also in this bar as well, there's still some pressure, buying pressure there. They're trying to hold the market at this level, but failed to do so, then bring it back. Then there's more buying pressure there, but she fails to hold. So they did the best, didn't they, to try and hold this market, and then it's just going to trade sideways for the remainder of the session. So that's about as much as the German DAX thought about Biden coming into the market. Not even 50-point move. We've got 25-point move there, which is interesting to say the least. Okay, I think I've gone on long enough, so I'll conclude at this point. Like I say, just let's see what happens today. Let's just have another quick look at the DAX, see what it's doing. Currently bouncing off that convergence of the two fib retracement lines there. You can see a huge volume there just coming in at that point as well to try and bring the market back. It's 5 minutes before the futures market opens. So it'll be interesting to see if this manages to get back to the high. Oh, well, there you go. Starting to move already. Okay, as ever, thanks for watching. See you in the next.